In this video, we will analyze the question of whether to buy Xcn coin here. Please watch to the end to understand. First of all, when we look at the chart, we can see that there is a clear downtrend coming from the top. This trend shows that the price has been under downward pressure for a long time and that buyers are not strong enough in the market. Downtrends usually represent periods when the market is weak and sellers are dominant. As long as this trend continues, it will be difficult for the price to move higher because every upward movement may face selling pressure when it touches the trend line. If you are thinking of buying, you should wait for it to break this trend. Of course, we should not trade only on the trend. Now let's look at other metrics. And right now, there is a strong bullish order block in the area where the price is holding. Bullish order blocks are known as areas where big buyers have previously entered the market and strong buying reactions have come in. These are the areas where the price can find support and start an upward movement again. The fact that the price is currently trying to hold in this area may indicate that buyers are starting to step in and try to support the price from the bottom to the top. If there is enough buying interest in this bullish order block, the price may find a strong base here and start an upward move. However, if this support zone is broken, the price may look for new support at lower levels. So we should wait for it to bounce from here and wait for the trend movement. Otherwise, if we enter from here, the price may fall again. We need to be cautious. Above is a strong bearish order block. Bearish order blocks are known as areas where the price was previously rejected hard and big sellers stepped in. Such areas are critical points where when the price rises, it may encounter resistance and selling pressure may intensify. Since this order block is where a strong wave of selling started earlier, once the price approaches it, sellers may re-engage and pressure the price downwards. Especially when it comes to this area, the volume drops and the price is stuck here, which may indicate that sellers are still active. And let's say the trend is broken and you buy, the price came to this bear order block. This will be the first resting place of the price. The price can linger here, it is very difficult to break it in one go. According to Elliott wave theory, price movements consist of 5 major waves, within which corrections usually occur. At the moment, we can see on the chart that the first wave has been completed, but the second wave has not yet formed. The first wave is usually the phase when the price starts to rise from the bottom and buyers start to enter the market. During this wave, the price gains upward momentum and makes its first strong move. However, every uptrend in the market is usually followed by a wave of correction, at which point the second wave comes into play. The second wave usually occurs when investors sell profits and the price enters a short-term correction. And then comes the third wave, the longest wave. But there is something like this. The second wave should not exceed the Elliott starting point. Otherwise, the Elliott wave will be cancelled. My advice is to wait for the trend break while in the third wave, and it will make sense if the price continues the third wave. A distinct W pattern is visible on the chart, and price action is moving towards the completion of this pattern. W patterns are generally considered a reversal pattern and indicate that the price may make an upward move after gathering strength at the lows. However, for now, we can see that the second bottom of the W pattern has not been completed. This pattern consists of 2 lows and a high in the middle. The first bottom usually occurs after a sharp selling pressure, where the price reacts to the upside with a short-term rebound. This reaction occurs when investors buy again, and the price rises to a certain level. And now, it has not yet made its second bottom. After it does, it will enter an uptrend, and you can buy when it breaks the neck zone. The target is up to where the W pattern starts. Another notable structure on the chart is the descending channel. The price has been moving inside this channel for a long time and is struggling to determine its direction. Descending channels usually represent a downtrend and indicate that the price is moving within a certain range. The upper band of the channel acts as resistance and the lower band as support. Currently, the price is experiencing an upward reaction after touching the lower band of the channel. This is one of the classic price movements inside the channel. Usually when the price hits the lower band, buyers step in and push the price up. And when the price nears the upper band, sellers put pressure and move it back down. The price may see the middle band as resistance and have a hard time breaking through it. And if it breaks through the middle band, it will move towards the upper band. When we look at the Bollinger Bands, we see that the bands are getting narrower. This narrowing is an important signal that volatility is falling in the market and price action is tightening. A narrowing of the Bollinger Bands is usually a harbinger of a big move. This is because periods of low volatility in the market are usually offset by periods of high volatility. Bollinger Bands determine the upper and lower limits of the price, indicating how compressed or widened the price action is. At the moment, the bands are getting closer and closer together, indicating that the price is consolidating within a certain range and is in the process of setting a strong direction. This type of situation usually signals a market breakout. However, the direction of this breakout is not yet clear. If the price breaks the upper band of the Bollinger Bands in an upward movement, this is considered a signal that the uptrend has begun. A hard breakout to the upper band followed by price holding there strengthens the likelihood of a continuation of the uptrend. Especially if a breakout occurs on volume, this signals that the uptrend will be stronger. On the other hand, if the price heads towards the lower band of the Bollinger Bands and breaks it to the downside, then the bearish bias may strengthen. A break below the bands indicates that the price may test lower levels and increases the chances of a continuation of the downtrend. In summary, know that an explosion is coming after this squeeze, and you can make your preparations accordingly. Looking at the MACD indicator, there is an upside crossover in the lower zone. This kind of crossover is an important signal that the market is starting to gain momentum and the trend may change upwards. The MACD is an indicator that measures the difference of moving averages, providing information about the direction and strength of the trend. A current upward crossover may signal that the downtrend is weakening and the price has more potential to move upwards. And if the MACD lines cross the 0 point, the uptrend will accelerate, and if the trend is broken, the uptrend will accelerate even more. When we look at the RSI indicator, we see that it had previously moved within a downtrend and broke it to the upside. This breakout is an important technical signal, signaling that the RSI may end its downtrend and gain upward momentum. At the moment, however, the RSI is retesting the trend line it broke. That is, it's in the process of a retest. This retest is usually an indication that trend reversals are taking place in a healthy way. If the RSI manages to stay above the falling trend line it broke and receives an upside reaction, the probability of a stronger continuation of the uptrend increases. So the current movement of the RSI is at a critical stage to confirm a trend reversal. The RSI broke this trend and showed a sign that the price will go up, and if it successfully completes the retest, the RSI will continue to increase, so the price will increase with the RSI. Looking at the vortex indicator, we see that the blue line has moved above the red line. This can be considered as a strong technical signal that the market is changing direction and entering a bullish trend. The vortex indicator is an indicator that helps determine the direction of the trend, and when the blue line crosses above the red line, it indicates that buyers are starting to dominate the market. Previously, the red line was on the upper side, indicating that selling pressure was prevailing. But now, with the blue line moving up, we can say that a change in market dynamics has occurred. This shift indicates that buying pressure is overtaking selling pressure and usually results in an upward acceleration in price action. The blue line has moved to the top, indicating the start of an uptrend. The vortex indicator has also turned positive, and if you want to be bullish long-term, we need to go above 200 EMA, which you see in purple, and the price is not above 200 EMA yet. If it goes above it, we can see a longer-term rise. 200 EMA should also be followed. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.